Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics of the day and the biggest moves in the stock market. It is presented with comedic common sense and just the right amount of sarcasm by an expert in financial literacy, and hey, that's me, Larry Steinhouse. Today is Wednesday, October 26th, and I want to welcome you to the show. Hey, did you guys miss me this week? We are here live on Facebook, Twitter, LinkedIn, and YouTube, and you can also find repeats of the show on Rumble and Spotify. Please search Money Chat Now and Larry Steinhouse, and you can follow me there as well. Hey, if you'd like to connect, please go to contactlarry.com. That's contactlarry.com, and there you will find my social media connections, my email, my text message information. That's contactlarry.com. Hey, just remember, if you're watching online, hit that like button. Everybody watching, hit that like button. Hit that share button, and don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. You can also find Money Chat Now and the Larry Steinhouse Show on Spotify, so please go there and subscribe as well. Of course, as you know, you can comment live during the show on YouTube, Facebook, LinkedIn, Twitter, and please say hi so I know you're watching. And of course, also join the Money Chat Now fan page on Facebook, so that way you can make sure you can see the show when I'm in Facebook jail, which seems to happen quite often. Anyway, please also, once again, go there, Money Chat Now page, and that way you'll never miss a show. Real quick, a couple of people saying hi already. I want to make sure that I say hello to everybody out there. Of course, it looks like we got my lovely wife. Thank you, Linda. I love you. We got Charles saying hi. We got Peter saying hi. Peter says he missed you. Aw, I missed you too. We got James saying hi, Deb saying hi, Tom saying hi, and the other Tom saying hi. The Oz rule. All right. So today we're going to be talking about the market update. We're going to be talking about the Oz Fetterman Debate. We're going to be talking about Series I bonds, home prices cooling, travel stocks, and airlines. Lots of good stuff. Oh, even Evan's on. Hey, Evan, how are you? Today, Money Chat Now, by the way, is brought to you by Investor Schooling, and you can attend a complimentary class this Thursday by going to investorschooling.com. There you will learn about real estate investing and stock options trading from those who do it every day. Wow, a whole bunch of people jumping in. Also, I want to say James saying hi from YouTube. Hey, by the way, did you know that you could share this program? This is how you do it. Underneath the video is a share button. Just press the share button and choose from Share Now to the drop-down menu, and then you'll be able to share it on your page or on groups. I want to thank, again, Betsy and Peter and all the other people who share it. I truly appreciate it, and I'll bet your friends find it enjoyable as well. All right, let's talk about what's going on, what happened while I was gone. What an incredible few days in a row we had. Wow. In the past 5 days, the Dow increased over 1,500 points. That's an amazing jump for sure. Yesterday was just more optimism as the money managers started to feel comfortable again. They were thinking exactly what I've been saying. They're thinking that the market already has all the bad news factored in. They and I think that the earnings expectations are low enough that the companies will beat earnings based on the pessimistic views of the analyst. Well, it looked like their theory was holding water until after hours last night when both Alphabet, the owners of Google, and Microsoft reported earnings. Well, first let's discuss the Microsoft earnings report. The big problem here was the revenue fell short about $500 million. Their net income also fell short about 14% to $17.56 billion. The cloud software called Azure, which competes with Amazon's AWS, had an increase of revenue about 35%, so that's a good thing. Azure is a cloud-based storage system and web hosting product. You know, basically the cloud. You know, sometimes I feel like the cloud is bigger than the sky. If you've ever driven in Virginia area near the airport, you will see acres of huge buildings where servers that hold the cloud are. It's weird. Walmart actually has their cloud in bunkers. It's amazing. The cloud makes me nervous sometimes, but I guess it's a necessary evil. Anyway, getting back to Microsoft, the guidance was also lowered as the company suspects that less computers will be sold, and this will mean that new licenses on the Windows operating system products may be muted. So the stock dropped about 6% after hours and after the announcement. By the way, this brought Apple stock down a bit with it. When Alphabet, still known to most as Google, also reported after the bell, the report did not meet expectations either. Alphabet earnings were actually down to 1.06 cents per share, and Wall Street expected $1.25 a share. That's pretty rough. Revenue also fell short by about $1 billion, and they also reported that YouTube ad revenue fell as well. This is what spooked the market after hours, and why Meta fell 6 points after hours. If you recall, we had Snap reporting in a slow ad revenue last week, and now we're seeing slowing reporting revenue for YouTube. The market is fearing that Meta's Facebook ad revenue will also be lower. So Meta reports this afternoon after the bell. My prediction is that they will crush it. But I actually think that with the ad revenue falling elsewhere, it could also mean that Facebook ad revenue is increasing as the companies are advertising and they're starting to focus more on bigger chances of making a sale. On the other side, I did my Facebook ad test this morning and it doesn't look so good. So here's my Facebook ad test. When I scroll down my feed and I count how many posts it takes till I get an ad, 5 seems to be the average in the past. I have noticed it as low as 3, so every 3 posts is an ad. But now, today, I counted 7. So that's not so good. That may be signaling to me that they do not have as many ads as I think they would normally be running. This may also signal that Google or YouTube, that the revenue will miss and have lower expectations. All I know is my rules told me to get out of Meta yesterday, and I did just that. I got out just in time. And an interesting report yesterday said that General Motors, by the way, is also sticking to their sales projections for the next quarter. I don't know. We all thought that automobile sales were falling, but GM claims that they will keep selling cars at a faster pace. The stock was up yesterday in the report, and it's still about half the peak of 67 last year. Now, keep in mind, I've been talking about my 2019 price theory. My theory is that we will be resetting to prices that are 2019 stock prices. GM is right there. Google has another 20 points to drop to be there. Meta is right there now, and Microsoft has another 150-point drop to be there. And Apple, which reports earnings tomorrow, also has another 100 points to drop there. And the stock right now is 150. So that's pretty. Wow, it's pretty rough if Apple's going to go to 1/3 what it is now. We will see how my theory plays out in the next 6 months, but for longer-term plays, I kind of think that Meta is still my favorite. All right, look, whatever. We'll talk about some other stocks, and we talk about travel stocks in a little while. Let's take a look at the futures, and let's see what's in store for us. Right now, the Dow is kind of dead. It's kind of like neutral. The S&P is down 24, and the NASDAQ, of course, is being killed by the Google and Microsoft tearing it down. All right. So Ken the Democrat's online. He's saying I should take more vacations. Vacations or vaccinations? I'm not sure which. Anyway, I'm not going to take any more vaccinations, that's for sure. All right, let's talk about the Oz-Fetterman debate. So last night was the infamous Oz-Fetterman debate. This was a debate in which Dr. Oz, who's running for Pennsylvania State Senate against John Fetterman, basically finally happened. The debate had obvious points such as the opposite stances on abortion, and as Dr. Oz stated, it is not up to the federal government to dictate policies of any of the states unless it is clearly in the Constitution. So just like everybody else who read the Constitution, I agree with them. It has nothing to do with it. Roe versus Wade has nothing to do with reality. The reality is that it should be done by the states, or should be mandated by the states. Fetterman wants abortions for all, and the government should, of course, mandate it. Like they mandated you and your business to be closed. Like they mandated you and your kids not being able to go to school and not be able to go out. Anyway, let's get back to the debate. The debate went on. Dr. Oz pointed out the obvious that Fetterman was not fit for the position because of his stroke. In my opinion, he was being kind. I don't think he was fit for the position because he's clueless. However, his pauses and stumbling over words proved Dr. Oz's points several times. Fetterman stated in the debate that he was reading a closed caption screen just to keep up. I wonder if the Senate hearing will have a special screen for him. It's seriously unbelievable that this is the best candidate that the Democrats can produce. The crazy part is that he fits in right with the other crazies like Joe Biden himself. I just don't understand where they're finding this class of candidate. The debate discussed fracking, and Fetterman clearly was confused on his views on this. I'm against it. No, wait, I'm for it. Whatever, dude. Walk away and let the healthy adults do their job. If you watch the video of this, it actually looks like Fetterman had a meltdown. The tweets after the moment on Twitter were not hysterical, but sad. Even many of the Democrats feel he made a mistake by going up against Oz in this debate. However, Dr. Oz proved his point that Fetterman is simply unfit for the job. We have about 2 weeks before the election, and the election for freedom in Pennsylvania. Our children's education, our safety, they all depend on it. So make sure, I can't believe that the fact that this election is too close to call. Can Democrats really be this misguided? I don't know. The two prophets, Rod Serling and George Orwell, were correct with their predictions of the future. The zombie apocalypse is here, and the television continues to eat the brains of the average American. I gotta tell you, I was in Florida the past 4 days, and it was like the America I once remember. The state was thriving, malls were busy, people were happy, and wow, it was just great. Let's make America Florida again by voting for Oz and Mastriano. All right, let's take a break here. I'll talk to you guys in about a minute.
Okay, so you thought about buying and selling real estate. You've thought about investing in the stock market, but don't know where to start. Well, what if you could find a place to unlock strategies to master both real estate and the stock market, all without the headache? That place is Investor Schooling, hosted by Larry Steinhouse, an expert in real estate, financial literacy, and the ins and outs of the stock market. You can attend Investor Schooling in person or online 8 times a month. You can and will learn how to make money in real estate, and you will learn mastery of stock techniques such as options and covered calls. You will even get a chance to ask one of your burning questions to the stock options sultan, the master of picks and plays. Call 866-424-2829 for free information and receive a complimentary pass to attend classes, or register online at investorschooling.com. Don't delay. These passes are limited. So what are you waiting for? Call 866-424-2829. That's 866-424-2829. Or visit investorschooling.com. That's investorschooling.com.
All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. And of course, if you'd like more information on investor schooling, you can go to investorschooling.com or call 866-424-2829. That's 866-424-2829. Hey, I want to welcome you back to the show. We are here live on Facebook, LinkedIn, Twitter, and of course, you can also find repeats of the show on Rumble and Spotify. Please search Money Chat Now and Larry Steinhouse on Spotify. Like and subscribe there. And of course, if you'd like to connect to me, go to contactlarry.com. That's contactlarry.com. There you will find my social media connections, my email, and my text message information. That's contactlarry.com. So it's really funny. I got to tell you, Ken the Democrat says MAGA loses. Yeah, he's absolutely right. We will not be making America great again by voting for Fetterman. I mean, could you be any more clear? All right. So far, of course, we've been discussing the market recap. Right now, the Dow is down about 13. The S&P is down 26. And the NASDAQ is down about almost 200, and that's because of, obviously, it's because of Microsoft and Google. It's going to be a tough one. All right, so far, we've also been discussing the Oz-Fetterman debate, and I still can't believe that this is the Democrats. This is the best the Democrats could put up against someone. And the fact that he's winning, or not even winning, but coming close is ridiculous. Coming up, we have Series I bonds, we have home prices cooling down, and we have travel stocks and airlines, and of course, today's picks and plays. But first, did you hit the like button yet? Did you hit that share button? Come on, everybody, hit that share button. Hit that share button. And also, leave me a comment and say hi if you haven't already. So if you're watching the show for the first time, please leave me a comment, say hi. Leave me a comment is really the only way I can know you're watching. Please share and like as well. And don't forget to order my new book. It's called Money Hacks. And if you ordered it, please leave a review on Amazon. So if you've ordered the book, please leave a review. Thank you. Let's talk about Series I bonds real quick. So a few months ago, I reported that the Series I bonds were paying a whopping 9.62 annual yield for the next 6 months. While I bonds shift twice yearly based on inflation, you could still lock in 9.62% annual interest for 6 months. In order to do this, of course, you must complete the purchase by October 28th. The bond rate is expected to drop to 6.48 at the end of the first 6 months. So it's not going to be bad. It's going to go from 9.62 for the first 6 months, then 6.48 for the second 2 months. That's not a bad average of about 7, 8, almost 8%. The U.S. Department of Treasury announces new rates every May and November, and you could still estimate the new variable rate about every 2 weeks from the Consumer Price Index report that are released in April and October. So because we've had runaway inflation, the bond rate hit incredible highs that haven't been seen in 40 years. There are limits to this investment, however. I don't know if you know that. The maximum amount per person or entity is $10,000. However, think about this, though. If you're married with 3 children, that's $50,000 right there. So the downside is you must keep the bond for a full year. Not really much of a downside there if you think about it. But it's really a safe place for money. So if you're worried about the upcoming recession or a stock market crash, don't forget to lock in this rate. You need to do it by Friday. So make sure you do it by Friday the 28th. And you can do this at a bank or you could do it online. So it's fine. Just do it. All right, real quick. Let's get into home prices. Hey, everyone keeps asking me the same question. What do you think home prices will do in the future? Well, I believe we hit the peak last spring, and according to reports, it looks like I'm right. According to an article, home prices are still higher than they were a year ago, but gains are shrinking at the fastest pace on record. That's just a weird statement. Gains are shrinking at the fastest pace on record. Anyway, the blame goes to the higher interest rates, of course, and the high interest rates are a problem for most new home buyers as they see that their chances of affording new homes diminish with each raise of interest rates by the Fed. I was on a phone call with one of my bankers yesterday. It was funny, and I was looking to refi a property that I'm rehabbing, and the loan officer said to me, the rates are really high right now. I laughed because she doesn't know what high rates really are. I remember when I bought my first home, and the rate was 13%, and at that time it was a bargain. When rates fell below 10% a couple of years later from that point, I couldn't believe it. And we all got a chance at a lifetime with rates being below 5% and as low as 3% in the past year. And of course, the higher rates are causing the housing market to drop. Prices in August were 13% higher nationally compared with prices in 2021, according to the Case-Shiller Home Price Index. That's down from 15.6% annual gain the previous month. So it's not so bad. I mean, they're still up pretty high. The 2.6% difference in this monthly comparison is the largest in history of the index, which was launched in 1987. But think about this: it went from 15%, whatever it went from 15% to 13%. Who cares, right? Anyway, medium house prices are decelerating at a record pace, leading the price gains in August. By the way, some of the states leading the price gains in August were Miami and Tampa, Florida, and Charlotte, North Carolina, with 1 year-over-year increases of 28% and 21%. Holy cow. Anyway, according to the report, the West Coast, which includes some of the costliest house markets, saw the largest monthly declines. San Francisco dropped 4.3%, Seattle dropped 3.9%, and San Diego dropped 2.8%, and they all fell the most. Look, the market in California was insane for a long time. And now, with monthly mortgage payments 75% higher than last year, many first-time buyers are locked out of housing markets, unable to find homes with budgets, and they've lost up to $100,000 in purchasing power. Basically, this is all reported by Realtor.com. A $100,000 drop in purchasing power is a big drop. The only thing keeping the market up is that higher home prices combined with higher interest rates are keeping the would-be sellers from listing their home. So basically, they appear to be locked into the lower rates and locked into their homes. The inventory issue continues to keep the housing market afloat. This will change in about 2 years. Foreclosures, believe it or not, are still at a record low, not a record high, but a record low, but that will change as the real recession starts to kick in. Remember I said that I felt that the beginning of the recession would be, and the layoffs would probably start to appear in February? So take a look at that. You'll start to see it in February. Today, housing prices are still high and higher than last year, so get your house in the market now if you want to sell it before you take another price cut, because it's coming. I'm telling you now, it's definitely coming. All right, real quick. Let's see. I think we got Rob saying hi. We got James saying hi. We got Mark saying hi. And there's a lot of chatter between Ken the Democrat and everybody else, so I got to filter through it. So if I didn't say hi, my apologies. All right, let's talk about some travel stocks. So it appears that the travel stocks continue to be at ridiculous lows. Look, guys know I'm heavily into Carnival Cruise Lines, and the stock hit a low of $6.11 recently. Man, since then it has risen to the mid-8s, and now it's pushing 9. All of the cruise stocks have been beaten down to the fears of recession and the fears of higher fuel prices. The airline and cruise lines have adjusted their prices to make up for the extra cost of fuel, but the passengers aren't even objecting. Have you been on a plane lately? The planes are packed. I went to book a cruise the other day. I had 2 rooms left. I mean, come on. Each plane I get on is overbooked or full. The industry is certainly not hurting. In fact, they seem to have more passengers than planes available to fly. According to an airline executive statement, air travel demand is showing no sign of easing. However, new planes are in short supply, and they warn that this is limiting the growth and keeping fares high. The only thing stopping American Airlines from having more flights is a lack of planes. What does that mean for investors? Well, it means you probably should invest in airplane building stocks like Boeing or Airbus. Boeing had been beaten down by mishap after mishap, but they're still the biggest game in town. The orders keep coming in, and the planes keep getting delivered, but according to airline executives, they aren't building them fast enough. JetBlue Airlines said it was supposed to receive 29 planes from Airbus next year, but will only get 22. Just 22 of the 29? This will hurt sales, but think about this. It's a small airline getting 22 new planes. That's enormous. For example, just so you know, American Airlines currently has 926 planes. Delta has 826, and JetBlue has 287. That means JetBlue is trying to add more than 10% to their inventory of planes. JetBlue also might be a play here if they feel they have the demand to add 10% to their inventory. They must be doing something right. Airbus is the other huge manufacturer of aircraft. Boeing and Airbus are set to report results today and Friday. Boeing today and Airbus Friday. And we'll be looking to see the results of Boeing today before the market opens and Airbus on Friday. I expect good news from both. I also suggest that while travel stocks are beaten up, start buying the stocks or start buying deep in the money stock options. The travel industry isn't as bad as it appears, and it isn't going to get decimated as those fear it will. Remember Warren Buffett saying, get fearful when others are greedy and get greedy when others are fearful? The travel stocks are down because of fearfulness. The question isn't if they're going to rise, it's when they're going to rise. All right, let's take a quick break here, and after this, we'll be talking about some picks and plays. Talk to you guys in a minute. Hi, I'm Larry Steinhouse, and one of the most misunderstood things in America is money. That's why I've written this book. It's called Money Hacks, because everything you think you know about money is wrong. And I'm telling you, everything you think you know about money is wrong. When you read this book, you will learn things about money that you did not know. You will even learn if money can buy you happiness. I have a full chapter dedicated to that. You're going to definitely want to read that. I talk about how to use other people's money to buy real estate. I talk about how to save more money, and I even talk about how to rebuild your credit score in this book. There are 22 amazing chapters in this book. This book is now available everywhere. It's available on Amazon. It's available on BarnesandNoble.com. And you can order this book right now, and you'll have it in 2 days, and you'll start learning things about money that you never knew before. So order the book right now. Go to Amazon, go to BarnesandNoble.com, and order the book, Money Hacks by Larry Steinhouse. Hey, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. By the way, would you like to be a sponsor of this show? We're looking for sponsors. We got a couple of people interested. We'll be talking about that soon. And if you'd like to be a sponsor, just know that we're expanding our base every day. And if you'd like to get your product out to my audience and help keep the show on the air, I'd love to have you as a sponsor. Hey, please reach out via Messenger or contact me at contactlarry.com. That's contactlarry.com. And by the way, also we have a Spotify channel. That's right, you can subscribe to the channel and listen to all the reports. By the way, we break the reports out one by one, and you can look up Money Chat Now on Spotify, and you can subscribe there. All right, so far, of course, we've been discussing the market recap. We've been talking about Fetterman Debate, and I could see online you guys are going crazy over this. Wow. I'm going to have to talk about Oz and Fetterman every day until the election with all the chatter that's going on between you guys. It's going so fast I can't even watch it all of it, so it's pretty intense. We talked about Series I bonds and how you guys should buy them before the end of the week. We talked about home prices are cooling down, but at the same time, the inventory is low. And we talked about travel stocks and airlines. And coming up, of course, we have today's picks and plays. But did you guys hit that like button yet? Did you guys hit that share button? Come on, everybody. Hit that like button. Hit that share button. Tell all your friends about the show. Let them know it's both entertaining and educational. And please share it on your page in groups that you feel will enjoy the show. All right, let's talk about what's going on today. Hey, it looks like the market may have been a bit stunned by Microsoft and Alphabet's results last night. The market may pause today as it waits for Meta to report this afternoon. As I said before, I have mixed feelings on Meta, as I explained earlier, but it's going to be interesting. It could go really, really good if I'm correct that the advertisers have moved to this platform, and then it could go really, really bad because I noticed, of course, the less ads on the platform when I did my Meta ad test. So, I don't know. Either way, I'm out for the earnings play because my rules say to get out before earnings. But I will tell you that if you guys know what a spread is, it might be a really good spread play. This is where you buy the call and buy the put at the same strike price, which is about where it is right now, which I don't know exactly where it is right now. I think it's at right around 130. And if you buy it at the same strike price, and it either goes up or down enough to cover the loss in the other direction. So that may be a play if you're into that. I'm just not into that. Boeing may also be the catalyst to drive up the market today. If Boeing's numbers come out good, the travel stocks will roar. Apple also has earnings tomorrow, and that could be trouble. As I said before, I'm concerned that Apple is just too high, and the current state of the market it just might be too high. But we will see. Amazon will be reporting tomorrow as well, and I believe this is going to be a disaster. The company is clearly not what it was during the scamdemic, and the stock is currently selling at 77 times worth the price of the stock. It's going to be a big problem, considering that most companies now are having their multiples settle in normal ranges of 10 to 20. All right, let's take a look at the futures real quick. Right now, it looks like the Dow is dropping, down 45. The S&P is down 32, and the Nasdaq is down 207. I'm wondering if something came up all of a sudden. Maybe the Boeing results were released. I don't know. All right, crypto also got a bump in the past few days, but nothing exciting. Bitcoin is still above 20,000, sitting there. That's the number. It doesn't want to move much past there. Ethereum is around 1,400. Gold and silver are not moving much either. Gold is around 1675 and silver is about 1950. I'm going to tell you, I really believe that these are buys right now. I think you should buy gold and silver, put it away, buy the physical gold and silver, not necessarily funds. And at the same time, as I said before, I think silver is great for the zombie apocalypse, which if we get people like Fetterman in and Biden in, well, we clearly are already in the zombie apocalypse. We just haven't been told yet. The Treasury bond is now about 4.06, and it looks to be steadying above 4. Now, I've said this before. I like the idea that it stays above 4 because if it stays above 4, Wall Street gets used to it, and we no longer have to worry about the number anymore. The average mortgage loan price, however, is now moving to 8%. Holy moly. I saw that this morning. I couldn't believe it. It's like 7.95%. That's insanity. So oil is about $87 a barrel, and it's creeping up again. And the average gas price is about $3.77. But don't forget, that's because Biden stole the reserves to lower gas prices for the midterm elections. Expect gas to be back in the 5s and 6s after the midterms. And no matter how the election goes, the Democrat will forget this even happened. That's how they are. They're just completely blind. It amazes me. I don't know how anybody can vote Democrat anymore. Look, I used to be a Democrat, but it's unbelievable. All right, I want to thank you all for watching Money Chat Now. We are live every morning at 7:30 on Facebook, Twitter, LinkedIn, and YouTube. And you can also find repeats of the show on Rumble and Spotify. My name is Larry Steinhouse. I am the host of Money Chat Now. I am the CEO of Investor Schooling. And remember, you can contact me directly at contactlarry.com. That's contactlarry.com. And by the way, if you'd like to make an appointment with me, just to meet with me or talk to me about anything financial, you can actually make an appointment with me on that site, contactlarry.com, by just clicking the button that says Make an Appointment with Larry. And don't forget, make it a profitable day.